Welcome everyone. How's it going? Yashu here with Bradford. Bradford, how's it going?
Going good.
Bradford and I were just talking. We got our Juju handy here. I think there. Let's see it. There you go. Oh, that's a big one too. All right, this is good. A chat, by the way. It's subscriber only chat. So if you want to chat, hit subscribe. Just to keep it a little bit easier on us to manage the chat as we move forward. Let me know if my audio is coming in clear and whatnot. But I thought I'd have Bradford on. Amazing time we had last time when you were on the channel. I think it was just before that mega bull run that we had. I think Tesla was closing at like $900, which was insane to us in October. And now we're sitting at 1,000. Let me put my Weeble. $1,008, and it seems like for the last couple of weeks it's just been a roller coaster ride, up, down, up, down. Let's get your general thoughts about where we're sitting at, kind of the macro landscape, and anything that you're seeing in your kind of and obviously your disclosure as well that you have to give.
Sure. What I'm about to share is the opinions of Halter Ferguson Financial. This is not investment advice or financial advice. They're based off a lot of sources, but I definitely could and will be wrong early and often. And you can see our disclosure by going to hffinancial.com/disclaimer. So that's that. Don't do what I do. I think what we're seeing generally in stocks at $1,007 is people are worried about this whole interest rate increase and how it affects growth stocks. The really strange day was it Friday last week where the stock was down 7%? Is that right, Yashu?
Sounds right. Yeah. I mean, how many days have we been down 7%? Feels like more than two.
Yeah, you mentioned this when we were talking a little bit ago. It's like, pre-split, we're sitting at, Tesla's basically $5,025 stock. And,
Right.
If you had told me that it would still be here in June of 2020, chilling out, hey, Daniel, I would have been really surprised by that. But because the stock visited, more than 1,200 a share, and now it's back at 1,000, it feels like a bit of a gut punch.
Right.
And I think some of our perspective can depend on whether or not we're using leverage. So, full disclosure for myself, I do have Tesla stock, Tesla options as well, and my clients have stock and or options. And I think when we do use leverage either through options or through margin, it can make us overly anxious about what's going on short term. So that's the benefit of just using stock only and not having margin. I think people that use leverage of some sort tend to discount that peace of mind it can bring you. And it's heightened risk to use options and margin, but there certainly has been a benefit for people who have done so at the right times. So I think it's kind of odd what's going on. Wall Street tends to price things based off of interest rates when they discount a stock, and you think, okay, well, in 2030 they're going to make 20 million cars and have earnings of $200 billion or whatever it's going to be, and then they assign a multiple to that, and then they go, okay, well, but then we need a discount to today. Interest rates play a role, but personally, when I do that kind of exercise, I'm using such a high interest rate that because rates went up from 1.5% to 1.9 or whatever they are today, it really doesn't matter. Like when I look at Tesla, I'm discounting at a 10% rate. And people use discount rates because they're you don't know if Tesla is going to execute and get to 20 million. Bulls have a very high confidence that they will. And understandably so. Tesla's doing well because they are executing so well in the face of everything.
Mm-hmm.
Um, so the markets can be very maddening at times, and I think that's what people are facing. Is like, why are they doing this? And I think this creates some opportunities. So this is a reason why you don't want to be all in um, with things all the time. It's like if you're all in, then you can't add to um, a stock or an investment when um, people dip it down in a what you may feel is an irrational way.
Mm.
Um, so that those are my thoughts about where we are.
Yeah.
I don't feel like interest rates are material to what Tesla is doing on a short-term basis. When someone wants a new car, they're not like, well, interest rates are 1.9 on a 10-year. I'm
Mm-hmm.
not going to get a car. They still want to get a car, and they're still going to
Yeah.
get a car. And if they're wanting to go electric, then they're highly likely to look at a Tesla. Um, so I don't think it really changes a whole lot with the stock.
Mm-hmm.
Um, but there's other companies that are trading at high multiples to where they're growing. I was just chatting with Eric Steinman on Twitter today, and he mentioned Apple. Apple is I, I didn't double check this, so they're around a 30 multiple or something like that, but they're growing less than 10% right now.
Their
So,
EPS
why
maybe. Yeah.
should Apple stay at a 30 multiple?
Hmm.
Um,
Yeah, I think their peg is 2.2, I think. Is
uh,
what yeah.
yeah. So I think stock picking is important. Um, you don't want to get stuck with. You don't want to be dependent on multiples and what multiples things are trading. Like long term, what's going to drive Tesla or any stock is how the business is doing.
Yep.
And it doesn't really matter. Like Tesla Daily commented that Tesla may be trading at a 75 times
Right.
next year's earnings, um, and that's pretty low for a company that's growing their earnings at higher than 100%.
Yeah. Isn't it crazy? What is EPS growth? I think it's 300 something, or his last time I checked, 300% EPS growth. Obviously, it's a little bit skewed because they were making
Yeah,
negative earnings for a while, but yeah, it's over 100 for sure.
yeah, it's from a low base, and next year maybe they do, or this year I think they do at least $10, but probably, above $12 in earnings, and they
Okay.
might do $25 in earnings a year after that. So like already you're at a 40 multiple, and then they're going to continue to grow earnings, in my opinion, our opinion, you know,
Hmm.
50% um, moving
Deliveries.
forward. So pretty soon you're at like a 20 multiple
Yeah.
for a company that's growing at 50%
Yeah.
earnings. It gets kind of silly.
Yeah. I think I think what we're seeing, and by the way, what I want to get from you, if I can, is just a trajectory of where you think, like let's go through the scenarios of when we think factories could come online, how much of an effect they might have to EPS this year. I'm sure you're probably not budgeting a lot of cars coming out this year out of both factories, but I'd love to get your take on how many. And then, really, like, what do you think the run rate of EPS could be? What trajectory could we be on by the end of this year? Because I think that's probably more key to look at. PE plus one, let's say. So yeah, just general thoughts around new factories, deliveries, and earnings growth by end of the year.
Sure. So I know someone who's works for a supplier of Tesla, and I've posted this publicly on Twitter. They're looking to supply 250,000 or more parts for Model Y in Austin this year.
Okay.
But that may have been dependent on a start time of January 1st. I don't know. And their factory to make these parts is capable of doing more, and I think it's up to like 600,000. And maybe they need another factory at a certain point. Um, so I think Tesla was confident they could do that many, but what they said to analysts was that they feel like they could do 150,000 in both in Austin and 150,000 in Berlin. But here we are sitting at January 19. I
Right.
thought I thought close to around the first of the year we were going to hear about them rolling cars out of Model Y.
Out
So
of
go ahead
Austin.
and highlight Lunaris's comment. You can bring that to the front. So yeah, I think Tesla can do more than 150,000 in year one of these factories, but they need to get started now. And the factory in Shanghai was at a run rate of something like, let's see, they did 65,000 in December. That's how many they made.
I think it was 800K. I think it was what the run rate was. Yeah. I have
Yeah.
to double check.
So they're 800K, and then supposedly around April, it's going to boost up by 50%. So you're looking at potentially over 1 million just from Giga Shanghai
right
for this year, which sounds crazy.
Yeah, it does.
Because they haven't even completed the footprint and the trying to do. I'm reverse right here, but in that section where they have the parking lot, eventually there's going to be a building there, I think, where they're going to make cars, and they'll put the parking lot somewhere else.
Okay, gotcha.
So for them to be able to do 1 million, without that even built up, I think it's a big deal.
Yeah.
Unless the new plan is the thing they're doing around April is for that. So million in Shanghai, and then in Fremont, seems like they've been limited either by trying to do too much in a small space or by the paint shop, and I have a hard time thinking they'll do more than 500,000 there.
Okay.
So I think it's I wouldn't like bet my life on it or my fortune on January 2023 calls or anything like that, but I think it's reasonable to think that even without Austin and Berlin, that Tesla can do 1.5 million just with what they have already. And then you add those, and I think conservatively they can do at least 150,000 from each of those. So you're looking at 1.8 million. And there's a rumor this week where they are talking to camera suppliers, and camera suppliers were thinking between 1.5 and 2 million for this year. So,
1.5. I mean, 1.5. I think Street is at 1.3 million estimated for the year, and that's, I think, just not giving credit for Austin, Berlin, which is fair, right? If you're the Street, you want to be conservative. All indications have been pointing for the last couple of months that we're going to be coming online, and yet here we are still sitting here waiting. So you kind of want to budget for that, right? Just bureaucracy, Tesla time, all this sort of stuff. For what it's worth, I think these two factories, obviously, I think Shanghai was kind of an anomaly with how fast they ramped up. But, I really don't think Tesla's going to slow down all too much past Shanghai, just because, these are new age factories. They've been sitting on their hands for a while. And clearly Tesla's probably not just going to be sitting on their hands privately inside of the factory. They're probably gearing up stuff, getting ready for once, they do get approval. I think Elon has even kind of said as much that, that I think 1 hour after approval, he said that, like, we're live and we're ready to start shipping out cars off the lot here. So, but yeah, it's sad to see kind of how long. I mean, okay, let me just have some context moment. I mean, it's still only a couple months that we've been talking about this. It hasn't been like it's been years and years and years. So I think it's important for me to highlight that for myself, but it does feel a little bit frustrating, right? Every week we hear this is imminent, this is coming online, indications point early in the year, Berlin's going to be coming online. And yet here we are. I talked to, when I had Dan Ives on the channel, he said March is really when he would actually start to worry, is if it was March 1 and neither one of these factories were online, specifically, I think Berlin. So we'll kind of keep it to that. But with EPS and earnings, I know you wanted to talk about estimates.
You were before we get to that, you're making a really good point in that Tesla is learning from each experience when they ramp up factory. I think a huge mistake that the people shorting Tesla made in 2019 is they thought that for whatever reason, Tesla would make the same mistakes in Shanghai that they did in California. Like,
Right.
Elon would not be a good fiduciary for his company if they just like decided to make the same mistakes. So, they learned from that. They got the blueprint for how to do things right in Shanghai, and we've seen that it's gone well. And I think they're going to take learnings from Shanghai and apply those to Austin and Berlin.
Yep.
So I when I heard it, I felt like 150,000 out of Shanghai and out of Berlin and Austin was a bit of sandbagging.
Yeah.
So it's
and
like you go back to the battery thing. What Drew and Elon were talking about with batteries is they essentially said, and they use different language, so you had to infer this, but it basically said that suppliers are going to give Tesla 1.8 million cars worth of batteries this year.
Yeah.
And then on top of that, they said that 4680, they think they can do be at a run rate of 100 gigawatts by the end of the year. And basically that means that this year they think they can make about 40 gigawatts. And that's enough batteries for another 500,000 cars. So it's not all going to go in cars, but like that's a lot of batteries. And it would be kind of shocking to see that kind of production.
I think there's something to be said about the 4680 validation as well. I think there's probably a group of investors out there that are kind of skeptical of kind of like, we'll kind of wait and see how this goes, because obviously it is new tech. There aren't cars out on the road with 4680s yet. And if it's going to be as much of a step change, as much as a game change as we think it's going to be, that's going to be dramatic. So I think there is kind of a cautious optimism around that with the street, because what Elon, Drew, Baglino said, 40% cost reduction eventually with these batteries, keeping the same range, if not more. So yes, definitely excited to see. I think it looks like Austin's probably going to come on. I think Austin should be online this week. No, is kind of, even like today was the 10th day since Dan Ives had said. So, who knows if we don't even get an official announcement until earnings? Because if you remember when Giga Austin was announced that it was going to be Austin over Tulsa, everyone knew a couple of days before earnings that Austin was picked, but it wasn't officially announced until the earnings call, right? So
that's good memory.
So maybe they just wait till earnings. I'm not sure how much the market is just waiting for those official announcements. But Bradford, I'd love to get your quarter four estimates if you have them, and kind of let's try to visualize. Like, it was a crazy quarter, 308,000 cars delivered in quarter four, massive, right? Without these two new factories, I've seen really high estimates from Tesla bulls on Twitter. Like I'm talking $4.50 plus with the tax credit. James Stevenson being an awesome person that shared his stuff on Dave Lee's channel. Matt Smith's kind of in the high 290s, I think, is what his non-GAAP EPS is. Do you have a model, or do you have any thoughts around what that could look like, and then therefore extrapolate some sort of run rate on stock price from that?
Yeah, when we were thinking that deliveries were going to be about 290,000. I was thinking earnings would be about $2.47 a share.
Okay.
That's around where Tesla Larry was on Twitter, and he nailed the previous quarter, and
Okay.
I conversed with him.
Okay.
And so when you adjust that for how well they did with deliveries in the quarter versus 290,000, I wouldn't be surprised if we saw $2.70.
Okay, and that's non-GAAP EPS?
Yeah, non-GAAP and without like the whole tax benefit asset,
Okay, because that's going to be backed out anyways in theory, right?
Yeah.
Okay.
So, right now Wall Street's around $2.22. They were below $2, but they have since moved up since delivery news came out.
Mm-hmm. So $2.70 would multiply by 4, annualized $10.80 So I've been getting a lot of we're seeing a lot of conversations, getting questions about PEs. What is a PE that is worth a stock that's growing EPS so high? How do you determine that? Do you care about PEG ratio? I'd love your kind of financial advisor perspective on PEs and what you gauge. What's a good PE for a company that's growing EPS as fast as Tesla?
Right. So I think they versus last year, they're gonna at a minimum double their earnings this year.
Okay.
But let's say the stock stays where it is, and you have $11 in earnings. It's essentially like a 90 PE.
Right.
If you just annualize the Q4, um, so it the next Q4 it should be double about that.
The
So
PE.
all of a sudden you're at a
Yeah.
45 PE,
Right.
and then um, I think they will grow earnings that the following year by 75%. But let's just say it's 50%, and now all of a sudden you're at a 30 PE for something still growing
At 50.
at 50%. So it seems like it's still undervalued.
Hmm.
I'm a converted value investor.
Okay.
Um, and and what value investors like to do is look at what the company is doing now. But Tesla is growing so quickly, you
Yeah.
can't do that. You have to project it moving forward, and the demand's there for the cars. Um, it's not just a luxury buyer that's buying the 3 and Y. The
Yep.
demand's there.
Hmm.
Um, and the real competition is internal combustion gas cars and diesel cars. So there's plenty of room for them to grow, even though the Chinese EV players are going to be gunning for Tesla long term.
Hmm. Okay. So
And
looking at,
that's just looking at cars. So like
yeah, yeah.
we're not giving any credit for robotaxi there. And I have the beta, and it
Okay.
does struggle a little bit, the full self-driving beta, where the car will
Yeah.
take me from my house to my work and back or wherever.
Yeah.
It struggles in my area because I have a ton of roundabouts.
Mm. Oh, okay. So it still has to get around the roundabout. Yeah. And you're right. This is just auto that we're talking
Yeah,
predominantly. And yeah, I guess FSD margin is kind of built
yeah.
into that by definition a little bit. But um, I and I kind of look at where we are right now as, I'm not totally surprised, but I'm a little bit surprised. But and I think it's important for me to look at both sides of kind of what's happening here. I think what's happening here is big money, institutional money is wary to give Tesla credit right now as we sit here for what might come this year, and it might be big. And the reason for that might be it's kind of unprecedented almost, the 4680 battery cells, the two new gigafactories that are coming online, yet we're still seeing delays. It's like they can see it, I'm sure, and they know, okay, look, we might miss a large portion of the growth this year from those two new factories. But until it comes online, let's just pause for a second, right? And I think there's a degree of like I said, cautious optimism right now, a little bit on the street with that. And so, should I think kind of the next hurdle to get through is, should these two new factories come online and 4680 start rolling off the line? I think that's the next big step change, of course, in what's going to push up street estimates for the year, and then by extension and proxy, going to push up our fair market value for what the street thinks Tesla is worth. And though I guess retail, we give Tesla all of the credit and we say, look, Tesla says they're going to do it, they're going to do it. Whereas the street has to be obviously a little
Mhm.
more cautious because they're handling fund money, not their money. They're fiduciaries, right? So as we move forward, I think it's kind of like we're at this point where we need the next couple of Legos to come into place before we can move forward. And so Austin really seems like the next thing to watch here, does it not?
Yes, but let me tag on that thought is that I think Tesla is still in a prove it mode where they have to prove it with execution and earnings
Right.
before the street and the supported stock price is going to give them credit for it.
Mm-hmm.
Um, so the bulls, they've seen the evidence and they believe that it's going to happen. Whereas the street, despite getting evidence to Tesla executing so well, they just don't quite want to believe it.
Yeah.
Um, so one message I want to share is like if you and your trading strategies are depending on the the stock price to be a certain level, um, that could be risky. Um, you know, I think if Tesla's going to prove it through earnings, and each time they do, people are going to kind of reassess. That's more my thesis with the catalyst. So
Mm.
I think this earnings call is going to cause people to wake up and kind of forget about their worries about interest rates. And I think there's a fair number of tech stocks where Wall
Yeah.
Street's underestimating what they're going to do
Mm-hmm.
for the fourth quarter.
Yeah.
Um, and then as you say, as they prove it with bringing Austin and Berlin online, then that'll also bring more confidence that they're continuing to execute. But really, Tesla's still going to need to prove it to them. They're going to need to
Right.
get those going to 500,000 run rate eventually, and bringing home the bacon with earnings.
Yeah, absolutely. No, there's Tesla's an execution play at this point. We know what they've said about 4680s. We know what they're going to do with Giga Austin and Giga Berlin. It's just a matter of them going out and executing. And I think that's what differentiates Tesla bulls from the non-Tesla bulls is really we think that Tesla and the team and Elon are going to execute on this. Might be, X amount of time late for Elon time, but the point is that they're going to execute. So
Let's bring the comment from Michael Neagle on the screen here.
it's covering your face. There we go.
Go ahead and read that, Yashu.
Preaching to the choir today, Michael says, let's get into some real world macro possibility thoughts on Russia Ukraine conflict and the short term effect that it might have on the markets.
Yeah, I definitely think it could spook things. It seems like the U.S. is trying to trigger Russia, and we might have like some kind of drama again in the Ukraine. But I feel like ultimately, let's say U.S. and Russia get into this proxy war in Ukraine again. Like, does it really affect the car demand in China or in England or in the U.S.? We got to bring ourselves back to the fundamentals as investors. Um, I can share this. I'll make a big confession today. See if I. It looks
Okay.
like in my right hand. This is my left hand, but
Okay. Okay.
I have lost tens of millions of dollars for my clients being overly conservative because of macro worries.
Hmm.
Um, in the main reason that happened is after the financial crisis,
Mm-hmm.
the U.S. was really hit hard with the financial crisis, but Europe and China weren't hit as hard. And I
Hmm.
thought there would be echoes of the financial crisis. So every time there was some kind of macro thing going on and it was financial in nature, I would trim back for clients and put 5 or 10% in cash, and it always costs them money.
Hmm.
And I think what's best is to stay focused on the long term, because you can't predict what's going to happen macro wise. You mentioned Russia, and I think about Syria. Nobody predicted that Russia would swoop into Syria and protect their ally and actually make progress against the rebels in Syria. No one predicted that,
Mm-hmm.
but it happened. Um, these things are unpredictable, and I think there's a lot of manipulation that can go on. Like, I really disagree with this whole interest rate thing. Yeah, if there's companies that don't have earnings and interest rates are going up, yeah, maybe multiples should come down in those stocks. I don't think I'm eating enough jujus. The
1001.
Tesla stock's falling now. We're down like 6 points while
Well,
we're
actually,
talking.
well, don't worry. We still got half an hour left, so we're gonna do our best with the good juju
Maybe you
here.
should throw me off because I'm bad luck.
No, 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 absolutely not. Awesome stuff. You know what, Bradford? You're totally right, though. Like at the end of the day, if you look at stocks like Zoom, for example, I was looking at Roku, I was looking at Zoom, I was looking at Teladoc yesterday, and I pulled up the daily chart here. Yes, there's been weakness in the market, obviously, for growth. But if we look at really from highs that we're sitting at, even let's say beginning of November to where we are now, we're down about 18%, right? 18% from the high, from the all-time highs, pretty much. But if you look
Mhm.
at a stock like Zoom, for example, and maybe Teladoc is probably a more prime example of really what's happened here to growth stocks, right? I have to even fix my access to really get everything in here. But from the highs, let's say from November, the same highs that we're sitting at with growth now, it's down 50%. So there's been relative strength in the market for a stock that I don't think is as long duration anymore. Tesla's not, a lot of its earnings for sure are in the future and the exponential growth. But you're sitting here today, you're totally right. We're talking a $2 and something cent non-GAAP EPS estimate that you have. That wasn't the case a year and a half ago. So I
Mhm.
can only imagine if yields were rising, and a lot of this is algo trading, and really, as soon as the VIX goes up, yields go up, algos start dumping a lot of these growth stocks. But I can't even imagine, let's go back a year and a half. If this scenario were to pan out, Tesla might be down. And I guess you could make that argument in last February. It was Tesla could be down probably the same percentage as something like Zoom or Teladoc, really, if it didn't have the earnings power to kind of back it up, right?
Right. Right. I think that's one reason why Tesla has held up as well as it has is there's a strong growing earnings story there,
Yeah.
and they're not going to be growing their delivery. Well, they might, but in general, they're not going to be growing their deliveries by 100%. But because of the leverage they have in their business and how much they make from these gigafactories, um, earnings are probably going to grow, more than 100% for some time to come.
Hmm. Yeah.
And it's just like, in the end, how profitable a business is and the future profits are, that's what matters. That's why you own a
Yep.
business.
Yep.
You know, if you have a real estate business and, if I could hire Yashu to work for me at a real estate business, what matters is how much Yashu can make me in
Yeah.
profits.
Absolutely. Absolutely. Right. What good is an asset if it's really, I mean, that's what we're talking about is earnings power. And
Yeah.
Tesla's going to be a behemoth should they execute in the next year and a half with their earnings power. And then we could talk about extrapolation for a year or two out. But it's just that chasm. I continue to look at it as kind of a chasm for now until it gets filled in with the execution of those factories coming up. And Berlin, it's not even execution, debatably, right? It's just red tape of them coming online and getting approved at this point. So just that chasm, and here we are crossed below $1,000. I think thousand. Are you looking at any key levels here for Tesla to hold? 1,000 being the most obvious, but any other ones?
I haven't been looking at Fibonacci's or anything. I'm kind of into the whole Fibonacci thing.
Okay, gotcha.
Um, when looking at support, you got, the build up and the retracement. You got, let's see, we'll do it this way. And you got your natural numbers, and like, it might retrace the move by 61%. That's like some natural number based off of the arch and
Okay, gotcha.
you
Yeah,
know
I
all that funny stuff. But like
yeah,
in the end, I'm not looking at that. Sometimes I look at it when I'm looking to buy on weakness. I look at what are those Fibonacci support levels so that, I have an idea where I might want to add to a position, that kind of thing.
right, gotcha. And how are options looking to you? Are you said that January 2023? I think you said is a little bit close, cutting it for execution wise. Like, what do you see in the options market right now? Currently, opportunity, risk, anything?
Well, I'd like to share some different thoughts. So maybe you could bring up like the January, and I may own some of these, but that doesn't mean you should.
Okay.
January 2024,
Oh, 2024. Okay.
yeah, and we go to the 500 calls.
Okay. I have to click on one. So
Okay.
about 60 grand, let's say, rounding up.
Yeah. So like to own the 500 calls, um, those are trading around. Okay. Um, you, you know, the midpoint is maybe 586. So basically, you need us to finish at 1086 in
Hmm.
January 2024. You need the stock to finish there for you to break even on those calls.
Hmm.
Um, that's kind of interesting to me. That it's what's interesting about these deep in the money calls to me is like you're getting leverage on the stock, but you're not having to use margin.
Hmm.
So with margin, at any time they can force you to sell your stock at a low point. Um, if you hit some kind of you know requirement, and it's like I don't want my hand to be forced. And I think there's a cost to that the people who use margin
Hmm.
aren't taking into account. So like this is interesting to me.
Okay.
Obviously, like if you buy these and stock doubles or triples, like maybe it would have been better to own an upside call.
Hmm.
Um, and certainly you can still lose 100% on these calls if it some reason it finished 500 or lower in 2024.
Right.
Then it would be bad.
Yep.
Um, so one of the things I did recently was I was looking at, okay, and this was with the stock higher, but I was like, okay, what are the calls that cost $600? What costs $300? And kind of getting a sense for the spread between those things. And what I noticed with Tesla options is when we have these huge up days, the price of the upside calls can get a bit inflated. So like, in January 3rd, was it,
Hmm.
the stock was up
12 or 13. Yeah.
12%. And and people are just kind of FOMOing into these
Yep.
upside calls and bidding them up.
Hmm.
Um, so I thought it was interesting to look at that. What price are what calls are at $300? So on that day, it was around like the 1,700 calls.
Right.
So I've just kind of been poking around,
Yeah.
and now that the stock's lower, let's see, yeah, the $300 calls are much lower. Um,
Absolutely. That deep in the money, obviously, you're going to need a lot of cash to throw at this, but that 500 strike. So break even, let's, rounding up, let's say break even is about $1,100 a share, January
yeah.
2024, right? That's break even
So,
at that
so
point.
basically, yeah, you're paying like 10% interest in a way
Right.
over the next couple of years. Um,
Over the next almost 2 years, right?
yeah.
Yeah.
So in a
730
way,
days.
you're maybe paying 4 or 5% interest. It's kind of a way I look at it, and
And
you're
your delta is about 89 on this, meaning you're
yeah,
owning currently about 89 equivalent shares of Tesla, which if you just bought in the open market, it's about 89 grand, of course, with Tesla
yeah.
sitting at 1,000. So, okay, so some leverage there. Do you feel like, and then let's say if you own deep in the money, are you selling any calls on a weekly, monthly basis to offset some of the cost of that call? Meaning if you own the 500 strike January 2024, are you selling monthlies, let's say 1,400 strike Tesla calls to get some dividend type returns every single month?
I think a tactic like that does make sense. Leading into these earnings, it makes me a little nervous about doing that, or leading into the start of Austin and Berlin potentially. Um, I may want to wait till those have started before I would, start some kind of program like that where I'm
Hmm.
writing upside calls or whatever.
Hmm.
Um, but I think that can make sense.
And do you look at, so it looks like you're kind of in the same boat with Austin, Berlin. You kind of think like if we get news overnight, this is kind of like it can be like at any moment type of like kind of a January 3rd scenario where we woke up and with 308,000 deliveries for the last quarter, Tesla popped 12%. you can first do you foresee potentially that sort of a upside move potentially happening again should these factories come online any minute now, or do you think some of that might be baked in? I'm getting comments about that as well.
Yeah, I just go back to January of 2020 and the opening of the Shanghai factory. Um, I think all of Tesla Twitter knew that the factory was about to open, but
Mm.
like for whatever reason, the world was shocked by it. Um,
Okay.
and Elon went to the factory and did
Dance. Yeah.
his dance, and
Yeah.
that
Yeah. Yeah. His famous dance.
people were shocked, and so it's like I almost feel like the Tesla bulls have a unique insight, like almost a view in the future.
Mm.
Um, it's possible there would be no reaction once the factory's open, um, but I gotta think would be a catalyst.
Yeah, that was the first time I think Tesla came close to $1,000 a share, or might have just touched $1,000 a share pre-split, right? That January when Shanghai came online.
Yeah, so it was around maybe 420 year end 2019, or low 400s, and then it got up to 420, and then it just started marching up, $500 a share
Yeah,
the next week, and then you had this spike up that happened like around February 4th and 5th, where it got up to like 969 a share or something like that.
yeah,
Yeah,
exactly. And then it came back down, obviously, with COVID and everything that happened with the factory
yeah.
shutdowns in Fremont. Um,
So
well, yeah.
it's strange that these delayed reactions to the news.
Mm,
We had this happen in October of 2021. That had the great earnings announcement. I mean, the great deliveries announcement, and
mm,
the stock started to march upwards.
yeah,
Yeah, and it wasn't until after earnings that things really started to spike, and then the analysts came out with their upgrades and revisions,
yeah,
and then we got the Hertz spike.
yeah.
What I can share with Tesla Bulls is that Hertz was a big deal to the investing public.
Okay,
It's just based off of questions I got from clients. Like
okay.
they were most triggered or excited by that, and for good reason.
Was it the Tom Brady effect, you think, or was it something else?
No, just a validation that you know Hertz wants low cost cars, and they want cars that aren't going to break,
Huh.
um, and they want cars that are in demand. Um,
Huh.
so it's like a validation on those 3 points, in my opinion.
As a Tesla bull, maybe who spends too much time looking into this than
Yeah,
he should, it doesn't make sense to me because it's not like demand, and obviously you know this as well, Bradford. Like
yeah,
demand was never of the question, or isn't of the question right now, at least for Tesla. Like they have almost unlimited demand right now with the backlogs that they have. So that's interesting that you're hearing that from clients.
yeah. The doubters just don't. They worry about demand.
Interesting. Hmm. Well, I and we also got a credit upgrade that week, and I've seen a lot of comments here about your thoughts on an investment, or Tesla finally becoming investment grade credit. Let's say in the first quarter of this year, hopefully after earnings, couple weeks maybe. Thoughts on that? Is that a catalyst that you look at? Is that something important to funds out there?
Yeah, there's some funds that it does matter for. I'd be surprised if it was meaningful. It's just a
Okay.
little extra bump that's out there.
Yeah.
Um, the funny thing is like I don't think Tesla needs a whole lot of cash. So like the credit upgrade helps with what interest rate they might be able to get if they were to go out and borrow money in the bond market.
Yeah.
Um, I do think if they go out in the bond market again, that they wouldn't have to do convertible notes and give away equity again.
Yes. No, for
There's
sure.
on much stronger financial position.
Absolutely. Uh,
Tesla does need cash to build their gigas, and to build 4680. Um, they're going to need over $100 billion to build up the gigas to get to 20 million a year, I think, and they're going to need at least 50 million to build up 4680 over the years.
mhm. It's going to be capital intensive, and that's not even talking really about energy. Well, maybe it is, but energy is a whole different story we can get into.
Yeah.
I highlighted this comment from James. James says, "Remember, the stock price and the company are two different things. The stock price will always bounce around, but the question is, how's the company doing?"
Yep.
Totally agree. Great point, James. And James is a Juju Gang member. That's so true, right? In times like right now, as we sit here let me pull up. Let me pull up the screen again. We sit here at $1,003, and we look at Tesla coming around with all the fundamentals, and everything going hopefully to plan. Cross my fingers. Yet the stock has been crushed from all-time highs. I mean, crushed is maybe an over-exaggeration, but really, I mean, it's down 20% from highs. I think it's kind of these swings that kind of present us with the alpha that we talk about as retail investors, doesn't it?
Yeah, these create opportunities. It's definitely hard to go through.
Absolutely, for sure.
So
By the
people
way,
are asking about the numbers I just threw out, like 100 billion.
Okay.
Those were just conservative capital spend numbers. The first phase in Germany, some people are saying that it was $4 billion that they're spending, and that gets the capacity of 500, 600,000 a year. So if you multiply that out, they may need more than 100 billion to get to 20 million a year.
I look at Austin was. Someone correct me if I'm wrong.
I might be off, but
I actually think
good chunk of money.
I think you're more conservative because Austin was budgeted at 5 billion, I think, but I think true cost has come around closer to 10. I think is what I read for those gigas. And mind you, I mean these are huge gigafactories that we're talking about. So let's say for round up to 10, 100 billion would be about 10 of those. That would be massive. But yeah, that's probably a 2030 question, anyways. I mean, this is again another thing is Tesla with their free cash flow positive, obviously, increasingly so. They're going to be able to fund, I think, a lot of their capex just through their cash flows and still pad up their balance sheet as we move forward in the next 5 or 10 years here. So I think Tesla is going to have a problem of too much cash. They're not going to know what to kind of do with their. They could expand gigas. Ideally, investors would probably love that, but I don't think Elon has said they're looking at expanding gigas in the next year or two here.
Yeah, it sounded like, and this may have been the third quarter call or the annual meeting they had, but it sounded like they're focusing on Austin and Berlin for now. The problem with China, with India, I think, is their government. Tesla would love to move in there, but their government wants to protect the current producers that are there.
Yeah.
Tata is one of them. Mahindra may be one of them. I'm a bit ignorant, but they want to make it hard for Tesla to do business there.
Yep.
And but the economy is being reformed by Modi, and we'll see if over time that Tesla can get in there. But there's a lot of room for Tesla to grow in Austin. You could technically fit 10 buildings that they just made in the land space there, but I think easily they could add another one, if not, 2 more.
Yeah.
And in Berlin, they anticipate on making, 2 more factories, and maybe the other quarter of the map is for support things like the drive units and the batteries. But yeah, eventually Tesla's going to need to break ground on something else. And I think Nevada might be a cautionary tale. I know people love Austin and are super excited about them, but there are limits to how much labor you can get into a certain space. So Tesla may look somewhere like South Carolina or North Carolina to grow in the U.S. And I gotta think they look outside of Germany next time.
Oh yeah, for sure, absolutely.
Like not knowing, when things are going to start. I think it's real crucial for Germany to get a decision in soon and to let Tesla know very soon.
Yeah, absolutely. I think going wisdom is kind of delivers begin in March is kind of what I've been reading in terms of headlines. Bradford, do you want to play our closing price guessing game with the viewers? Should we do it?
Yeah, I have no idea. Someone's gonna penny me though. You play
Okay,
the Price is Right game.
Price is Right rule. So if anyone's listening, have no idea, throw in your Tesla closing price guess for closing price, not after hours closing price. And like Bradford said, Price is Right rules. So you can't be over, you can be at or under. So I'll guess last because that's my competitive advantage is being his host. So I'll let you go and the chat go for now.
I'm gonna say 999 spot 69.
Okay, there you go. That's pretty close. I should I do 999 and then 70 you just one penny
Yeah,
over?
sure.
No, I'll do
Show me you love me.
I'll just do 1,000 on the dot. I just keep it on. I'll keep it on the dot. Okay, I see a bunch of guesses coming in. We'll see where we close out. We have 11 minutes to close here. Selfishly,
I'm gonna talk about a short-term risk.
okay, yeah, let's talk about it.
Elon being on the call.
Yes, we were talking about this before. Let's see. Let's hear your thoughts around good or
Yeah,
bad.
so yeah, it was maybe 3 weeks ago or so. People were talking about Cybertruck, and Elon. This was on Twitter, and Elon said he's going to be on the call to talk about the roadmap. Um, and I, I feel like it's not going to be super productive. Elon's not suddenly going to say, "Hey, we're going to start the Tesla Compact in China on
Yeah,
January 2023."
yeah.
I don't think he's going to get a firm date on the Cybertruck. Um, but hopefully he proves me wrong. I feel like in general he's going to say, "Hey, we're going to focus on the Model Y,
Mm-hmm.
and we have a ton of demand for the Y, and I think the public is not going to be happy with that because it's not something new and exciting."
Mm,
But what Elon's going to be saying is, "Hey, we got um, we got a lot of future profits in the Model Y, and we're going to focus on that." But
mm,
people may ignore that. So Elon might be a little bit of a negative, but I think that this is just my opinion,
mm-hmm.
and opinion of Halter Ferguson Financials. I think Tesla's going to beat by a wide margin on earnings, and that analysts are going to be forced to upgrade their estimates
Mm,
for the future, and that we'll see how the stock responds. But I don't think Elon's going to be a good thing. And I I, I love Elon, but I feel like when he's on the call, and sometimes I think he's like maybe watching his baby X while he's on the call. It's like I feel like whenever there's a question, the other people at Tesla are like, you
yeah.
know, is
Well,
Elon? What's Elon gonna say? Or we need to wait for Elon to answer before we can say
yeah,
something. And
yeah.
they seem like nervous to jump in and answer after Elon says something. So like
Mm-hmm.
I felt like the last call was great and that we got like a new perspective
Mm,
from Zach and Drew, and Zach gave us perspective on Tesla insurance that I don't think we would have got if Elon was on the call.
mm,
Um, so we'll
yeah.
see what happens.
Something to keep in mind. I think us Tesla bulls like having Elon just because I think we can at least somewhat try to translate what he might mean, kind of reading in between the lines. But you're right. I think institutional investors prefer the straightforward goods and kind of Wall Street talk. So it will be interesting. What I find interesting the most is Elon replied to, and I think it's forgotten a little bit, but Elon originally replied to someone's question about Cybertruck, and they're like, "Hey, Cybertruck, it's been so long since we've gotten an update. Like, can we get one?" And I think that's what he replied to originally and said, "Yeah, it's been a while. I'm hopping on the next earnings call and giving a product roadmap." Right.
Mhm.
So I'm expecting some sort of a Cybertruck update, which implies that the Cybertrucks aren't going to be imminently delivered this quarter. Then probably by deduction. And then on top of that, I think what is interesting, what my guess is for Elon coming on, I think it's going to be predominantly about, like he said, Tesla's roadmap. So I think it might be energy based. Tesla's next leg is really energy, right? Batteries go hand in hand with that. So I think maybe some more clarification for people around where they see energy going in the next 2 or 3 years. But whenever Elon comes on, I welcome it as someone that wants to hear what he has to say. So another headwind, by the way, I wanted to throw past you, another risk, downside risk, let's say macro wise. And I'm not sure how credible this is, but it's always nice to keep in mind what downside risk might be. I've been hearing a lot with China wanting to approach COVID with a zero COVID strategy. In
Mhm.
essence, they don't want to minimize it. They want to, as soon as they see it, they want to nip it in the bud. Shutdowns is kind of what they're doing at the moment. I've been getting some comments about this, so I've been thinking about it lately. How do you see that strategy? And it's okay if you don't know too much about Chinese politics around this, but China, like, let's say, God forbid, if factories were to shut down in China due to this strategy that the government is going through, is that something that we should keep in mind, do you think? Or do you think this is kind of just me overthinking it?
I think it could happen. I'm not sure how likely it is. It's definitely a scary prospect. When when Shanghai was just barely, you know, they were barely ramping the Model 3 for the first time,
Hmm.
and Tesla was forced to close down in Fremont. We didn't know when they would start back up again,
Yeah.
and um, the county shut them down in contravention of the national and the state essential business law.
Hmm.
Um, and if they were to be shut down in China, we wouldn't know when it would come back.
Hmm.
Um, so that would be kind of scary. And I, I, I feel like I could be wrong, but I feel like more than half the profits of Tesla currently are because of Shanghai.
Hmm.
I'm
Yeah.
probably wrong, but
It's a good amount, I think,
yeah,
of the margin, right? Shanghai is margin enhancing right now. I think Fremont has plans to be a little bit more better moving forward, but I think you're right.
yeah.
Um, so,
And
yes.
here's another like these narratives. So like there was this bear negative that narrative that the Model S and the Model X were going away. Like that was how they spun the delivery numbers, is that they were like phasing out the S and X. Like no, they're not phasing it out. They're
Hmm.
ramping it back up. They're ramping it back up to what they plan to be is over 100,000 combined per year. And
Yeah.
Elon aspirationally wants to get to like 130,000.
Yeah. And if it was not for supply chain issues last year, I think S and X would have increased ASP, would have increased margin as well. So it's exciting. I mean, I guess January hasn't been easy for supply chains. I'm guessing either, with everything that's been going around, and workers having to take sick days everywhere and isolate and all this stuff. But hopefully, as we're kind of past this, cross my fingers, in February, March, and Dan Ives has said first half of this year, supply chain issues should ease up quite a bit. It's something that I think is, as we sit here at 995.79, you got to think about, what does the market know, because the market's always trying to get ahead of whatever we're going through, and hopefully this is the last puke. But hopefully supply chain issues this year increase ASP as well.
Mm-hmm. And let's say Shanghai does get shut down because of COVID and Shanghai, and um, long term, I don't think it matters because Tesla has plenty of cash. If they needed to, they could raise more cash in a heartbeat. Um, and long term, there'd be no real impact, but it
Yeah,
definitely be a little scary for the bulls. But
that's fair.
like, we got to ask ourselves: Are for bulls, are you really long term or not?
Hmm.
Um, if 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 we woke up 2 weeks from now and the stock was $800, like, yeah, it doesn't feel good.
Hmm.
I wouldn't like it, but
Yeah.
like, does it really impact how I feel about the company?
Yeah, my options wouldn't like it for sure, but yeah, shares are not going to expire, so that's the good news. Um, well, it looks like we got a couple minutes left here. Let me see if I have any questions from the chat, and if you have any questions, feel free to throw them in. Um, let's see here. Did you see any questions that you wanted to answer?
I'll go back a little bit, but
Okay.
in general, um, we need to remember times like this.
Hmm.
Yeah, if we're long-term investors, we got to be ready for times where the stock's down on no news, um, or it's down while news is good, um,
Hmm.
and we have to be stay focused on what the company is doing, and that's true for any stock or any investment.
Yeah.
Um,
Macro. It's mostly, I mean, as we sit here and I'm looking at the VIX here,
like if
24.
someone was outside where you live, Yashu, and they were saying, Yashu's terrible. I'll
That,
only pay $100,000 for his realty business. Like, you're not going to run outside and sell it to him. But like
yeah.
for whatever reason, when with stocks,
Hmm.
that's the temptation is like that we should feel bad about it. And
Yeah.
Tesla at 996 is where people are choosing to meet.
Yeah.
At 996, there's someone buying
There we
and there's
go.
someone selling at
There's
that
the bell.
price.
Absolutely. Yeah. No, this is the market price, right? This is, I guess, perfect market theory that tells us this is the perfect price for 1 p.m. on January 19th, 2022, right? So you're right. Let's see who won this, by the way. Closing price was 995.65. Um, you were a little bit off there. Bradford, so was I. I think we are a little bit too optimistic. Peter K coming in with 995.11.
Could you
Uh,
could you put in the question of Raptor? Any comments on the options expiring?
yeah, there we go. And I think Peter K, you've won the virtual Juju prize for today. So congrats.
Wow.
Raptor says, any comments on the 125? Is it really? I think it's 12.5 maybe, but in options expiring Friday in the market.
Yeah, so I want to talk about this. There's some. I think there's a bunch of like 500 calls that are deep in the money that are expiring this week. So we got to put our market maker hat on. Can we do that,
Yeah,
Yashu?
let's do it. I mean, you're the former market maker, not me. So I guess you got to put it on.
All right. So let's pretend like it was a Tesla bull that bought those calls. And maybe it's even like pre-split or something, but they bought the calls and they have these 500 calls that are now deep in the money. So when they bought those calls, they didn't sit there and the bull didn't sell stock against them to like be hedge delta neutral. But the market maker, when the market maker sold those calls, they they bought some stock against it, and to kind of like cancel out the movement in the stock. Like the market makers don't want to make bets on which direction the stock's going to go. They
Hmm.
want to be like the casino. They want to buy here and sell here.
Yeah.
They want to make that spread. So um, then as Tesla stock has gone up, the market makers are forced to gradually buy more stock.
Hmm.
And so the market makers are hedged to those calls. All right. So, let's say the Tesla bull who bought them,
Hmm.
he exercises those calls on expiration, and then that cancels out with the market maker. Like that's a
Yep.
non-event.
Hmm.
Now but the Tesla bull, let's say it's just one person,
Okay.
they may not have the money to exercise those calls,
Hmm.
or they may not want to go into margin to exercise those calls. So what could happen later this week or whenever whoever's long these calls is maybe they sell the calls
Hmm.
to market makers, and so the market makers would be buying the call,
Yeah.
so they have to sell the stock against it.
Yeah.
Um, so that could push the stock down as the week goes on. So
Hmm.
it's possible people long some of these deep in the money calls are selling them this week, and that could depress things a bit. But in the end, options are what's called a zero sum game.
Hmm.
There's someone long the option and someone short it.
Yeah.
Um,
And this person, in theory, this, let's say this Tesla bull in this example you're saying, could also be rolling them out. We don't know, right? Like they could be selling, they could be buying to close, and then, or yeah, sorry, selling to close and then
yeah,
buying to open to roll out, let's say 4 months until next quarter or
yeah,
whatever, or next year. Who knows what this person is up to? So the delta spread on that might be very minimally negative as well. So there's just no way to know for certain what is kind of happening here, right?
yeah. Let's say the Tesla bull rolls out these calls. So they own January 2022. And
Hmm.
those are close. Those are 100 delta, the 500 strike. Um, so if they rolled them out, they would sell those calls. So they'd be selling 100 delta, and then
Hmm.
they might turn around and buy calls that cost $500
Yeah.
in January 2024, and those might have a 87 delta.
Right. So
So
so net not very, much of a difference there.
yeah,
And if I've pulled up the weekly premiums heat map to get maybe a little bit more insight from you on this. This is just the weekly net premium spent on the top strikes in the market. This is Traditex, by the way, folks. And it says a next week 1100 strike. There's a positive 24.7 million net premium on the positive side, and it looks like some of it might be being funded by selling this week's. So there might be a rolling into earnings, so to speak, of premium for next week.
yeah,
So
a lot going on, and you need a
yeah,
supercomputer to keep track of it all.
you do. It's almost like at some point you just have to. It's hard to filter out what's noise from what's signal is kind of the problem here, right? And a massive amounts of puts as well. 1070 puts in pretty much at the money. I think when these came through for the end of this month, about 31.4 million of them. So
Yeah,
so a lot going on, but who knows how much of this is macro or hedging for earnings or whatever it might be, because 28th is also earnings week as well. So um, great. Anything else you wanted to add on to the option side of the game of what's happening or what you're seeing?
I think I'm tapped out.
Yeah, too much juju.
I don't
Yeah,
have the stamina like you do.
no, it's okay. No. It's great having you on as usual. Hopefully, the next time we're on, we're having a green day and not a sub $1,000 a day. But yeah, thanks for coming on. Just for understanding from more of a financial advisor perspective of kind of what you see, how much of this is rational, where we might kind of be headed, and kind of if I had to sum up your thoughts, if I can, I would say you're saying take the long term approach. Look at it from a macro perspective of where we're kind of sitting at and where we'll be once these factories start coming online. Is that fair?
Yeah, you need something long term to be able to hang your hat on. If you're going to be an investor in a volatile stock like Tesla.
Hmm. Yeah.
You got to have something long term, and like the fact that it was down 7% for no reason, like last Thursday or Friday, is just like maddening.
Yeah.
It's crazy.
Yeah. Absolutely. Well, we'll have to check up with you. Maybe Bradford, if you're open to it right after earnings report comes out or something, and we can get your thoughts on kind of how the quarter went for Tesla after we get their numbers, and hopefully we'll have a green day next time you're on as well.
Yep, sounds good. Yes,
Awesome.
you.
All right. Thanks everyone. Take care. Thanks for commenting, liking, subscribing, whatever it might be. Appreciate you guys, and I'll catch you in the next one. Take care.
All right, bye for now.